Welcome back to Chairman's Briefing. I'm your host, Rachel Lee. This episode is brought to you by Summa Silver. Let's get started. Gold prices dropped sharply to $2,902 per ounce on Thursday, marking a two-week low, despite touching a record high of $2,956 earlier this week. This highlights the dynamic nature of precious metals markets, even during strong bull runs. The recent 8-week winning streak was fueled by impressive ETF inflows, plus Goldman Sachs raising its target to $3,100 per ounce this year. However, Thursday's pullback demonstrates how profit-taking remains a powerful short-term force when fresh catalysts are absent. Technical analysts have noted that gold bulls still maintain overall advantage despite the recent dip. The market continues to balance multiple factors: robust investment demand through ETFs versus natural profit-taking after significant gains. Silver followed gold lower to $32.17, although its decline was more modest. Both metals now face an important test with the PCE inflation report, which could provide direction for Federal Reserve rate decisions that significantly impact precious metals prices. Fort Knox is America's legendary gold vault in Kentucky. According to the U.S. Treasury, it houses 147.3 million ounces of gold. Yet nobody can verify with certainty what truly lies inside its heavily guarded walls. The last glimpse inside happened in September 1974, when Treasury officials opened just one of 15 vaults for a carefully orchestrated 2-hour media event. Reporters handled random gold bars with no serial number verification, purity testing, or comprehensive inventory. This display represented merely 6% of the claimed holdings. This decades-old mystery recently exploded across social media when Senator Rand Paul responded, quote, "Let's do it," to suggestions that DOGE, which is Elon Musk's government waste investigation team, examine Fort Knox. The exchange quickly went viral and reignited public interest in America's gold reserves. The stakes could not be any higher. At today's prices, this massive treasure trove is worth about $428 billion. Any significant shortfall could trigger market instability, potentially devalue the US dollar, and send gold prices soaring. Now, despite this renewed attention, Fort Knox's complete contents remain one of America's most consequential financial mysteries. Equinox Gold is acquiring Calibre Mining in an all-stock transaction valued at 2.6 billion Canadian dollars. This creates Canada's second-largest gold producer with assets across 5 countries in the Americas. The combined company will have potential for more than 1.2 million ounces of annual gold production from 9 producing mines, plus the Valentine project, which is under construction and expected to begin producing by mid-2025. Now, this strategic merger positions the new Equinox to generate substantial free cash flow during record-high gold prices, helping to quickly reduce debt while funding future growth initiatives. Industry veteran Ross Beatty will chair the 10-member board. Market reactions have been mixed so far. Supporters highlight the production scale and growth potential, while critics explain concerns about geopolitical exposure, particularly Calibre's Nicaraguan operations. Summa Silver has staked the Kennedy project in Nevada, securing 99 claims spanning 2,000 acres with no royalty obligations. The property covers a district that produced high-grade gold and silver from 1891 until World War II. Historic mining focused solely on near-surface oxide material, creating 15 grams per ton gold and 311 grams per ton silver. Deeper sulfide mineralization reportedly remains untouched. The CEO, Galen McNamara, said, quote, "Although we will continue to direct our focus to the Hughes and Mogollon projects, we look forward to advancing the Kennedy project to drill-ready status in the coming months." Collective Mining has delivered its highest grade intercept to date at the Apollo target in Colombia, striking 106 meters at 9.05 grams per ton gold equivalent within a broader 497-meter zone. Now, the record hole yielded a 1,500 gram meters of gold equivalent value, expanding on December's impressive results. Additional drilling successfully infilled the deposit while discovering a new high-grade zone at the footwall contact planned for follow-up exploration. Collective continues aggressive advancement with 6 drill rigs currently operating across multiple targets in their fully funded 60,000-meter 2025 campaign. A 7th rig joins next month. This sustained exploration success has delivered significant shareholder gains over the past year. Ascot Resources is battling to revive the premier gold project in British Columbia's Golden Triangle. Despite pouring first gold last April, operations were halted within 5 months due to insufficient underground development, depleted finances, and skilled labor shortages. The company announced a private placement targeting a minimum $60 million through units 11.5 cents, each with a full 2-year warrant. Sprott had also committed to release $7.5 million from escrow upon meeting specific development benchmarks under their November 2024 agreement. Ascot openly acknowledges uncertainty about raising sufficient capital to execute their plans. This predicament highlights the substantial risks facing single-asset mining companies attempting to restart historic operations, even in resource-rich regions like the Golden Triangle. Conservation groups have sued the U.S. Forest Service over January's approval of Perpetua Resources' Stibnite Gold Project near Idaho's Frank Church Wilderness. The historic mining site was abandoned in the 1990s and left significant arsenic contamination in its salmon habitat. Perpetua plans to extract gold, silver, and antimony, which is a critical mineral for defense and batteries, while promising to clean legacy pollution. After 8 years of permitting, the company claims that the project serves national security interests and will create jobs. Environmental groups counter that the expanded operation threatens wilderness areas and wildlife, arguing that the Forest Service ignored alternatives and environmental impacts before approving what could become one of America's largest gold mines. And there's your briefing for this week. Leave us a comment. We read every single one. And make sure to subscribe if you haven't already. I'm Rachel Lee, and we'll see you again next week.